Hello everyone. Welcome to ICM weekly educational webinar. Myself, my colleague Weil welcomes you, as well as thank you to everyone to joining today. Today is another quite interesting.
I guess we're facing technical issue. We can't hear your voice.
Nothing but you can say refer to the mechanical trading, or we can say like algorithmic trading or automatic trading system or something like that. You can see that automated program which coded with a certain coding language that's suitable with your trading platform. Yeah. So here the program execute trades on a behalf of traders when certain trading rules meet. So basically, it's almost 80% of trading is automated now. So in the world now, in a busy schedule with all the traders, so they like to always go for automated, where doing a manual trading, we have to be full time be in the desk to understand the market, to know the entry and exit. But in case of automated trader, as I said, it's a mechanical type of trading system, or algorithmic trading or automated system, which gives you the entry and exit point, which also provide you the automated system by just like that to get to the programming into the particular coding. So a trader can design set of rules and ask for the coder to write them in a computer language, and a script and can deals in many things in trading, from execution to the money management also. Like basically basic things what automated trading does is like give the entry, give the, and it gives you the entire money management system which is going to follow on behalf of you about automatic trading. So when you're talking about automate auto trading misconceptions, many traders have something in their mind. What is automated trading? So they're new, or maybe they're experienced with auto trader. They maybe have some failures or be fails in the automated trader. So it's very hard to create an auto trading system, because it's not a simple. By forming a strategy, you have a manual strategy, or maybe you have some a formed strategy by your a theoretical knowledge, maybe a practical knowledge, to know more about what exactly the technicals, and implementing that system into the computer, or into the programming into the computer, or program to the design into the computer. So it's not easy to way to understand, or maybe very not easy to get into it. So what it's like a same like expert advisor on a MetaTrader platform, or we can say like even if you're anyone done with trading on a MetaTrader platform, so you would have experience with the expert advisor, the same way which has been built, which gives some result on doing the trading automatically by giving a signal providing on both entry and exit. An automated system, it's a get rich quick scheme. So obvious, like it's a quick fast money it makes. Even there's a risk, there's a lot of risk involved, because if you, unless you follow, you have a proper auto trading program, it leads you a lot of difficulties. But same time, it's trade for you. The system will do the trading on its own, and knows how to pick the winning trades. So a proper auto traded system or auto traded program will definitely, a proper one will definitely give you winning trades. There are a number of trades will be there. For example, there are multiple trades. There are different type of designs or signals providers are there. Like you can get like a daily basis or a scalping basis, like free minutes in a few seconds. Also, some traders are some trading softwares are there, which also like some other like it gives a day trading, or maybe we can give a short-term, long-term trading. So it has been designed based on what strategy and what programming you're coding into the system. A trading system will make you fortune while I'm lying on the beach. As I said, like, it's a very simple. Start the computer, run your program, synchronize your trading platform, and start the trading. So obviously, like it's keep trading for you even you're lying anywhere in the beach. So this is all exactly the try to understand there are misconceptions out there. Many people try and understand a different way, unless you don't have a proper auto trading system program with you. So next is that let's move on to the next page. What is the benefits of using automated trading? So we're going to see the pros and cons of the auto traded. Okay, any system or any strategy or any trading strategy, there will be benefits or there will be a pros and cons. So coming to the benefits of automated trading system, It helps to reduce the impact of emotions. So as we discussed in previous webinar, like psychological emotions are there, while trading manually, because many traders will try to feel the trading, ups and downs in the markets. As I said, like emotions such as greed or fear, which really impact. But when coming to the automated trading, usually a trader is key weakness is the trading is emotions. That's what you overcome here basically, because the system trades on yourself on itself, but in a manual trade you yourself trade. So this will be overcome. So it will reduce your the emotions touch on this. By using automated trader, the trader can lower the effect on the performance, but emotion can force him to turn off the system at the proper time or vice versa. So this also can happen, like so when you have a system goes wrong on your performance, obviously in the emotionally it can stop your the turn off the system by proper time and wise. This also happens in that. So this is also like a benefits of major benefits of automated trading system. A trader will able to backtest a certain strategy to see if it is successful or not. So many platforms offer backtesting option, and they are very convenient, but the trader must buy proper backtesting data. This is the most important thing to have very important things to get advantage on this trading auto trading. That means a backtest is very important on any strategy, because unless you have a proper backtesting data, you can't able to give you a proper performance or proper result on your trading backtesting test. So keeping discipline. So most of traders lose money because they cannot preserve the discipline while trading, and they enter the losing trades and ditch the strategies. The automated test system will only execute the trade based on the matching criteria of your set rules. So when you're trading in a manual, like basically like you lose your discipline. So instead of following your strategy, you try to overcome or your overall jump on the crash strategy, and because of many emotional touch in the trading, so you lose your complete the path. So when coming to automated trading, so it's only execute the trades on what you're set on the rules, what you're programmed, what you have been kept on the design on the program. So using different strategy at the same time, a trader can use multiple system on his platform to achieve a better performance. So here what happens out of system like trading systems, we have different multiple strategy available where they try to implement in different multiple system on their own platform to have a different type of performance, because one type of strategy auto strategy gives you some result, like other one gives a lower result. So you can compare that. So this also gives a lot of relief. So these are the major benefit out of auto trading system. Let's move on to the drawbacks. Obviously, there is a benefit, there is a disadvantage also there in the auto trading systems. An auto trading system needs to be back tested and then forward test many times before setting it on live accounts, since there are always room of bugs which could eat the account. The most important thing, just having a testing for a few days, or maybe you will try to have some report from others, or maybe from the sellers, you have seen some a virtual report from yourself by having some type of a bubble in performance. So that leads to it's long losses to your accounts. So this is a major disadvantage of this auto trading. So a trader should monitor the system while it's running. It makes sure that being on the safer side. It doesn't mean that you have auto trading, it gives you a lot of money to make you millions or make you a millionaire in a day. It's not like that. But make sure that you are properly following the system, what report, what are the trades happens, and keep monitoring as a journal or how it's trades, whether trading in a proper rule, what you kept on the system. So these are things to be carefully monitored. This is the most important thing. Sometimes a system could be show profit in backtesting, but lose in live trading due to latency of trade, which is usually zero on the same strategic tester. Difference are there, major difference are there. When you're doing a demo, because demo is just a virtual account, and the live it's really live, a real account. So obviously there'll be a much difference, a major difference will be there when you try to use it. So always when you use an auto trading system, you tested something on a backtest with a demo, but still it's not an actual result or actual performance is given to you out. So always try to be on a live trading atmosphere where you can get your proper backtesting report. Based on that, you can try to change your program, or you can try to change your money management systems inside that trading. There are many scammers that are flooding into the web to sell the failing system. So here, actually, know that we have discussed already, like 80%, or maybe we can say major volume of the traders are coming into the auto trading. So obviously there are scammers will be there. So definitely you have to overcome this, because scammers try to sell the system just like that. So you're aware of this benefits and advantages. Disadvantages. Take it into consideration. Backtest it properly, the demo, and try to test it on the live account for a month or something at least, and you get into the long term with the auto trading system. So this is a lot basic about, and my colleague would like to join here to give a more brief, and going to give you more ideas about how exactly it works. Thank you.
Thank you, Sai. Hello, everyone. Thank you for attending. So, as I explained, the misconceptions of automated trading systems, a lot of people that believe, like, for example, I just want to find this system and then I'm going to make a lot of money, and I'm going to make a fortune. The thing is that an automated trading system, especially the one that are used on a MetaTrader 4 platform or such trading platforms, they are just more like of an executor. So they go for following the certain rules that you decide. So for example, if you just find a certain strategy, you write down your strategy. When you write down your strategy, you just have these rules. So these rules, in order to get that automated, you just turn this set of rules into a computer program, where you put it on the platform, and the program will execute on you. Instead of you doing the trades manually, the computer will do the trades. So this is one type of automated trading systems that everyone in a certain level are using them. But also there are some new concepts in the market. They aren't really new, but to some they are. That they are related to neural networks, to machine learning. So it's just the machine that starts to learn how to find the proper path to grow your account, which is still there is still no basic foundation or solid foundation that such automated systems are working, at least on retail client levels. So this is for a general idea about automated trading systems before moving forward with more details. So let's move forward to the next slide, which is about key automated trading strategy. So key automated trading strategy. Now, as I mentioned, these strategies, they could be any set of rules. So for example, a trader would work on or would use a moving average as a tool to execute trades. So instead of waiting for the moving average to cross, waiting in front of the screen in order to trade, so they would just turn to automated trading. So when the price crosses above the moving average, the automated system or the expert advisor will execute a buy trade, and vice versa. This system can also have an exit rule. This exit rule also can vary, and they can add some risk management, use filters, time filter, and slippage spread filter. So what I'm gonna dissect about this, so in order to create an automated trading strategy, so first you have to set your entry signal or entry rule. So this entry rule can be based on one indicator, can be based on multiple indicators, it can be based on certain rules or certain set of rules to be matching at the same time. So for example, I want the price to cross above the moving average 50, at the same time the RSI is above the 50 level, and the price is above the parabolic SAR. So I can add set of rules or set of filters, and if these rules are all matched or are all correct, then the automated system will create a trade. So this is the entry signal. The exit signal can be stop loss, take profit, trailing stop loss, break even stop loss. It can also be any cross between, for example, a cross between the price and the moving average, any certain rule for a certain indicator. It can also be based on a certain pattern in the chart. For example, it can be based on any candlestick pattern. So all these also can create an exit signal. So similar to entry signals, we can have exit signal. Also, the exit signal can be based on the balance, for example, percentage of balance or percentage of losing trade, or a percentage of money relative to the account balance. So this could be used. A trader would have also to choose a certain money or risk management. So some traders do not accept to set a certain stop loss for a trade, so they go for recovery mode. The recovery mode will have to, for example, average on the trade using different techniques. They could be using martingale with certain multiplier. For example, if the first trade was 0.1 lot, the second trade would be 0.2, the third would be 0.4. Some traders would go for another custom sequence or custom lot sizing. For example, they could be using the Fibonacci sequence, 1, 1, 2, 3, 5, 8, 13. So a trader would have the variety to use different, would have the ability to use different aspects or different types of money management or risk management. They can also have a certain guidelines or certain keys that the AA shouldn't cross. For example, if the equity drops by 5% on a certain trade, or the bulk of the trade crosses 5%, or for example, if I have a group of trades that are winning certain amount of money or losing certain amount of money, the AA will exit trades or close the trades. There are also another type of filter that could be added, the news filters. So for example, if you're trading, if you're having an expert advisor automated trading system that works while the market is ranging, so definitely some traders would be afraid to have this automated system turned on while the market is awaiting any certain news, for example, like the Federal Open Market Committee decision later today. So they believe that they should stop the AA from working on such high volatility events. So they can add a news filter, and this news filter would automatically stop the AA from taking any trades during or before, during or after the release in certain minutes. Also, there is a time filter. For example, if the trader using a system or a strategy that's high, that works well during high volatility. For example, they would go for an exemption on Monday and Friday, and they'd go for definitely, for example, Tuesday, Wednesday, Thursday, where the activity could be much higher or the movement could be much higher in the market. So this is also could be time filter. They could be also choosing, instead of time, they could be choosing instead of days, they could be choosing also the hours. So I want my EA to work from 9 a.m. to 6 p.m. or 7 p.m. for example. I don't want it to trade overnight. Other people do have a different option. They prefer the EA to work overnight, for example, based on a certain strategy. So this is also the kind of filter that you can add to your expert advisor to make sure that you have a proper strategy. Also, a slippage or a spread filter. So for example, if you're going for some breakout strategies, definitely during high volatility sessions, you could encounter slippages. So also you can add a slippage filter where, for example, the slippage, if the slippage exceeds 1 point or 2 points or 1 pip or 2 pip, I don't want this trade to be executed, so it won't be executed. Also, there's a spread filter. If I want to trade and the spread is not in its normal level or its normal range, I don't want this trade to be executed. So these are key points or key elements that you have to include in your automated trading strategy in order to ensure that you have a strategy that's fulfilled or that has room for everything, or you're adapting for everything that could happen in the market. So these are the key elements to include in your automated trading strategy. Your strategy, many strategies are there. Most of them, they rely, for example, on moving averages, on relative strength index, on MACD indicator, any indicators or oscillators that are in the market. Some of them, they go for classical patterns, for example, similar to auto chartists, for example. So also these are types of strategies to be used. In order to move forward, for example, I chose a certain strategy, and after choosing this certain strategy, I want to make sure that it works. So what I have to do is to backtest my strategy. Backtesting a strategy, it means that, for example, we're currently on September 16, 2020. I want to run this expert advisor from the same date in 2015. So it will run the EA for the past 5 years, and I can see how the EA would have performed if I had it online for the past 5 years. And based on this, I can see where I can do my analysis to know where are the weaknesses and strengths of my EA and how I can improve this. And after that, I'll be having, definitely when I do my backtesting, I will have a backtesting report, which would include certain elements. I'm going to talk about them in a while. So now let's move to the MetaTrader 4 platform to talk about the strategy tester part, which is very important, and it's good to use if you are willing to go for automated trading. Okay, So this is the MetaTrader 4 platform. Definitely you can see this. This is the normal shape, for example, for the platform. So if you just go for you want to check the strategy tester, you can just close this one in order to make more room. You can go for this icon here, the strategy tester, or you can go for view and also choose strategy tester, or just press Ctrl+R. So by doing this, you can go for the strategy tester here. But before I want to show you how you can implement the EA, or how you can add the expert advisor to your MetaTrader 4 platform. You better open the navigator, and under navigator you have the expert advisor. So for example, let's use the moving average. You just drag it to the chart that you want you want to work, or to the symbol that you want to work on. And then here you have the command. You can choose the sides if you only want to take long positions, short positions, long and short positions. So you can use the criteria, and then here you can enable alerts of trades taken. Live trading, definitely you need to allow live trading, allow the LLM ports, and then go for OK. However, we see here a sad face and not a smiley face. You go for auto trading, and you can see the smiley face. So the AA is ready to take trades. Also, there are some options. You better go to Tools, Options, Expert Advisor, and you can click from here, allow automated trading, allow the LLM ports, and you press OK. So the AA is ready to go for inputs. Here you can set the inputs for the strategy. For example, the lot size, the maximum risk to be taken is almost 2% of the balance of the trading balance. The decrease factor, also it's one of the inputs to add for this expert advisor. The moving average period, for example, I'm using moving average period 50, and if I'm using a shift, I'm going to use shift 0. So this EA will have to execute a trade when the price crosses above the moving average 50, and we have a closure for a candle. So for example, I'm just going to set OK. So here the EA will have to look for, I'm just going to change this to 50. Now, when the EA crosses here below this, when we have, this is the H4 chart. So when the H4 closes and the price is below the moving average, the EA will definitely take a short trade, a sell trade. And this EA doesn't have, for example, an exit strategy unless the price crosses back above the moving average, but not like a stop loss or a certain take profit. But definitely you can go for your own EA where you can set a take profit and stop loss. So this is how you can set your EA on the platform. And to remove the EA, you just go for right-click Expert Advisor and remove. So this is very easy. Now I'm just gonna go to the strategy tester. From here, you can test either an indicator or an expert advisor. So you choose an expert advisor. You choose an expert advisor also from the list that you have. I have MACD sample and MACD sample and moving average. I'm choosing moving average. I choose the symbol that I want to backtest on. I'm choosing the euro dollar, and this is the every tick. So we have certain types of models, price models to check the EA on, but the most important one, or the most solid and precise, is every tick. So you're using the tick data. Tick data is very crucial to make sure that your EA is performing properly, or the backtesting is realistic. You just set the date that you want to backtest on. For example, if you have data back to 2000, so you can go from 2000 till the current date. So I'm just going to go for 2015, for example, until quite 2021. So it definitely would have to set the last date, which could be today. Depends on the data that they download. So here's the period that I have to choose. I want to test this this strategy on the hourly time frame, on the daily time frame, on the H4, 15 minutes. So I just set the time frame that I want to test on. This is the spread. So for example, this is 2 points, 5 points, 10 points is 1 pip, or you can just set current, and automatically the strategy tester will take it from the market watch. So for example, let's go for 5. And after that, you can go for expert properties. Here you can choose the properties. For example, I want to use an expert moving average of 50, and shift is 0. And then by this, I press OK. And after that, I can go for visual mode in order to see it running in front of me on the chart. And I click start. So when I click start, you can see here how the market is starting. I had a new chart in front of me. It's euro dollar H1 visual. So this is the visual mode for the backtester. And here I have currently, the EA currently initiated a sell signal. here I can fasten the testing forward, so I can control the speed of the test. I can go for this. So here's faster. So this EA, I have a couple of losing trades. So the market was going up and the EA was selling. So I got 3 losing trades. You can check the trades and the results. You can also go for the graph here. And when we finish, we can see the report. So this is how the EA is working. The market is going down. For example, here I have this trade. Let's stop here. So the EA initiated this trade here and closed it here at this price. So if we just continue forward, if I don't want to watch all of it in the visual mode, I can go for skip, and then automatically it goes forward, and then I'll see the result and the graph here. So I'm seeing how the EA would have performed if I turned it on for a past while ago. Okay, so this is until now. So the strategy tester started from the first trade was taken since the data downloaded was almost starting in May. So from May 15 to September, you can always go for downloading more data from tools. The History Center, you can choose the symbol and then you can choose download. So in order to have more data. And here at the graph, you can see that the quality of this data that I'm using is 38.38%, which is not really good quality. So you better buy data in order to test, which could have 99.99% quality, which would be much better in order to have more realistic view on how your EA performed. So after seeing this performance, so the account started with 10,000 and ended up with 10,082. I can go for report, and in this report, I can assess how the strategy performed. So what are the key numbers, key statements that I have to look for in the report to see if my expert advisor is promising or not? So first, I have to check the modeling quality. So this modeling quality should be 99.9% in order to be more sure about the data that I'm using, that it is real data, that is more solid than the ones that are available in the market. So the better the quality, the more realistic would be the performance. So a lot of people would show that their EAs are making a lot of money, but their quality data is 25% or 38% or 50%. So meaning that the data is not enough to really take into consideration this testing. Here's the initial deposit. So the account started with $10,000. This was the total net profit, $70.75. Among the key levels, the key statistics that I have to, the key numbers that I have to watch out for is the profit factor. Profit factor, you can see here, this is the gross profit and this is the gross loss. So the profit factor is the ratio from the gross profit to the gross loss. So as long as the profit factor is above 1, it means that the EA is making money. As long as the profit factor is diverging from 1 or going higher, 2, 3, as long as it goes higher, it means that my gross profit is very high relative to the gross loss. If my profit factor drops below 1, it means that the gross profit is less than the gross loss, meaning that the EA is losing money. And as long as it drops below 1, it means that EA will keep on losing money. Also, we have an expected payoff, which is an expected statistic or number to the coming trades based on certain factors for profit and loss. So also higher expected payoff is always better. And also what I have to mind is the maximal drawdown. So for example, let's say I have an EA that was backtested for the past 2 years. I was able to turn $10,000 into $14,000 in the past 2 years. However, my drawdown was around 70% of the final balance, which is 14,000. So this would definitely be a big number, which could be more than my balance. So so this could be around $9,800, which means a very big drawdown. It means that the EA was losing much before ending on a certain profit. So definitely a trader, in order to be on the safe side, would definitely have to look for lower drawdown or less drawdown. The drawdown is the amount that the EA is losing money from the balance, the biggest amount lost from the balance. One drawback for backtesting on a MetaTrader 4 is that it doesn't show you the equity drawdown. It only shows you the balance drawdown. So so someone could trick you with one thing, that he says my EA makes a lot of money. This is my drawdown. So his maximal drawdown is on the balance 14%, However, at the time he had a floating loss of almost 50, 60, or 70 or more percentage on his account. But the end result, it ended with this 14% only. So this doesn't mean that this is the maximal drawdown. It is the maximal drawdown on balance, but it is not the maximal drawdown on equity. So you better always mind this glitch or this gap. Also, you can go for total trades. So in order to check how many trades the EA is doing, in order to see if you have, for example, lower spreads, you don't have any problem with higher number of trades. But if you have a higher spread, you better watch out for the number of trades executed, since the money you're paying would be vast relative to the performance. Also, you have to check the number of short positions or long positions. You have to look for profit trades, percentage of profit trades, percentage total, and loss trades total. For example, for this EA, the percentage of profitable trades were around 20.83%, while the losing trades were around 79.17%. So I have more losing trades than profitable trades. However, the EA ended on a positive note, winning $70. This means that my risk to reward ratio is very appropriate. So in order to check this, I have to go for the average profit trade. So on average, my profitable trade is gaining $80, while on average, my losing trade is losing $20. So it is as if I'm using ratio 1:4. So I'm losing 20 pips in order to win 80 pips. So this is a good ratio. So definitely when you have a good risk to reward ratio, it will impact your percentage of success or percentage of profitable trades relative to percentage of losing trades. Also here you can go for maximum consecutive wins, maximum consecutive losses. This could be used in order to assess what's the recovery mode that you have to use. For example, if your EA is showing that my maximum consecutive losses is 1 or 2, so you can go for a recovery mode. When you go for recovery mode, it means that if you just adjust your entry, the first entry to be with low position or low volume, you can go for a higher volume in the second entry and the third entry, and then definitely you can have a better chance of ending or closing the group of trades on some profits. So definitely you have to mind the average consecutive wins or average consecutive losses. So while using this, we have on average consecutive wins, for example, 1. So you can, for example, set the EA after winning 1 time, you have to reduce the next entry volume by, for example, 90%. So by doing this, you're reducing the number or the amount of money that you're losing within the next trade. Also here for max average consecutive losses, I have an average consecutive losses of 4. That means that I can't go for doubling, for example, since if I want to double the first trade, the second trade, third trade, and fourth trade, it's gonna blow the account. Especially if I have a look at this, the maximum consecutive losses reach 13 at a time. So 13 consecutive losses, if you're going for a double, definitely you'd blow your account. So this is how you can check the backtesting report. It is a must to understand each segment of the report in order to know how you can perform. You can also save the report here. And when you save the report, for example, let's go for this. So when you save the report, it opens. And you can see here the performance. This is the period. This is the model with every tick. These are the parameters for the EA. And these are all the information that we just checked in the report. This is the graph of the balance graph, the money in the account. And these are the trades executed. So you have the detailed statement for the performance of the EA within a certain time limit. So this is all for today. If you just have any questions, please write them down. I would just like to remind you that all the information, analysis, news, or opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. So if you have any questions, please don't hesitate. Okay, so there's a question. We often call this robot. Does it also count the effect of news? Well, as I said, there are some robots that you can just filter out the news from. Other than that, you can just, for example, if you're going for a range trading strategy, you better watch out for news. So maybe you can turn it off before the news manually. And if you just, like for example, have a breakout strategy, you'd prefer to have it on while the news is out. So definitely it's your choice. That's why you have to make sure that you know what the EA is doing, how the EA is executing trades, or how the robot is executing trades. And based on this, you can filter whether to turn it on or to turn it off when you believe, for example, for myself, I do my analysis. I believe that the market is going in a certain trend. The market is trending. So the market is trending. I have a set of EAs that I can use when the market is trending, so they can execute the trades on my behalf. And their aim is to maximize the profit when the market is trending. Perfect. I do activate these EAs. When I do my analysis and believe that there are no catalysts in the market and the market is moving in a sideways or ranging, so I do turn on my range trading EAs that they aim at making much money when the market is ranging. So they would sell the high and buy the low. So by doing this, the EA would be performing well. You are most welcome, sir. So if you have any further questions, please write them down. I would just like to pinpoint one thing that also Sai talked about is the latency of trades. So sometimes you go for backtesting. When you're backtesting a breakout EA, when a breakout EA, it makes money on the news, for example, it shows, for example, let's say take into consideration that gold was trading at 1960 when certain news came out, and then it jumped to 1970. So the EA showed that you took a trade in, for example, at 1962, while in real mode, maybe there would be for a broker, maybe there could be some delay on the price. Your entry was at 1965 and that's 1962. So this latency, some of the platforms that has strategy testers, they don't account for it. So it shows that your breakout EA is working well, while if you go for the proper or real execution, if your broker has certain latency, it won't be performing well, and that's the case. I have a question. How can we set AutoTrader for our trading system? Excuse me, sir. I couldn't get what you mean. Do you have a certain trading system that you are working on and you want to automate it? Is this the case? Okay, so you have a couple of ways to do it. You can either seek, for example, a trader's help or a coder's help on the mql5.com, where it is a marketplace where coders are there to help you translate your trading system from rules to automated rules or to computer language. Or you can go, for example, for certain websites that they can allow you to link the rules together. For example, you just go for select, for example, if the price crosses or the RSI crosses above 70, buy. If the RSI crosses below 30, sell, for example. So you just set the rules in the trading context, and then it will deliver the language, the computer language, and you just come here to the MetaTrader for the meta editor language. Here you can click on this MetaCodes language editor, and when it opens, so this is the MetaCodes language editor. You go for new, you go for expert advisor. Next, you name your expert advisor ABC123. You go for next, also next, and then this will open. So you just remove all this, and you then you paste the code that the website have given you, and then you press on compile, and after that you have your EA ready. You just have to go to the navigator. You have to go to navigator here, and then under expert advisors, you just right click and you press on refresh, and then your EA will show. So this is how easy to create it. For example, you can see here, this is expert advisor ABC123. So you just choose it, you can drag it on the platform, on the chart, in order to execute the trades. You're most welcome, sir. And if you have any further questions, like you can just contact your sales representative, and you just can ask for more help, or you can just send an email to webinar@icm.com or support@icm.com, and we'll have a closer discussion about how we can help you in reaching your goal. Okay, I can see a hand up from Mr. Ali. Yeah, it is a bit sophisticated, but you'll get there somewhere soon. So it's just first you have to make sure that you're confident of your trading, you're knowledgeable about what you have in the market, like you're good with technical analysis, you know the indicators, which set of indicators do work together, and then you set your own strategy, you have your plan, and after doing this, you just go for turning these set of rules into an automated trading system. Then after this, you go for backtesting. After backtesting, you see the results. If they are fine, you go for forward testing on a demo account. And after having the forward testing on a demo account, you can just make sure that the EA as well, you go for stress testing, and after that you can trade it online on live account. Yes, Mr. Ali, there will be a recording published on our YouTube channel, hopefully by tomorrow. So I'll make sure to send it to you. I'm just gonna write down your email and send it to you once it's ready. Yes, it will be there on YouTube, so you can watch it again. And feel free to also contact me if you need any further support. You just can talk to your salesperson and ask for support. So we'll be glad to help you. So I believe this is it for today. I hope you all benefited from this webinar. Definitely, the future is about automation. So we better get ready or brace ourselves to join this trend. But definitely, we have to make sure that we know all the foundations, all the basics, in order to be on the right track. So this is all for today. Thank you all for joining. Sai, would you add anything?
All good. Thank you for everyone.
Perfect. This is all for this week, and hopefully we'll next week we are starting again a new series of educational webinars. We will be repeating everything that we started in the past 5 months or 4 months ago. Since April we started this course. We're going to be repeating it again with going on more details about more stuff related to trading. So this is all for now. Thank you all for watching and have safe trading.